The idea is that we have to begin to increase our money left over at the end of every month so that we can subsequently invest that money. We're going to do that in one of two ways. After we have evaluated our budget or our expenses over the last 2 to 3 months, we are going to easily be able to determine where we are spending in excess and where we can cut back. So we're going to play defense first. And defense means that we're going to reduce the amount of money that flows out of our pocket or our bank account every month. That means that we have to stop digging, stop incurring new debts, spending on credit, and begin to cut unnecessary expenses. This is important because a dollar earned is less than a dollar saved. A dollar saved has already been taxed. So a dollar saved is actually a dollar saved. A dollar earned is a fraction of a dollar because after you take out the income tax associated with that new dollar, you're left with 75, 70 cents on the dollar. If you're in the 25% tax bracket, you're left with 75 cents on the dollar. If you're in the 30% tax bracket, you're left with 70 cents on the dollar. So it's important that we begin to reduce our expenses first for that reason, in addition to the fact that typically, as you earn more money, so too do your expenses increase. So if you don't reduce and control your expenses first, as your income continues to increase and rise, you will spend a corresponding amount of money. Once you have controlled your expenditures, then you can begin to assess ways to play offense or increase the amount of money coming in. This can be done in several ways. You can work overtime with your current employer. You can pick up a side hustle or start a side business. Or you can look for employment that pays you at a higher rate. All of these activities, both defense and offense, the goal is to increase the amount of money left over at the end of every month. Once we have taken decisive action to reduce our expenses and possibly increased our income, we should be left over with a surplus of cash at the end of every month. Now, this is going to require sacrifice because you may have to change certain behaviors and thoughts around how you spend money to consistently be left over with a surplus to invest at the end of every month. But once you have taken those steps, you will have resources that can then be invested wisely into cash flow positive assets like stocks and multifamily rental property. These are assets that, while they take some initial time to set up, particularly multifamily real estate, once they are set up properly, they will provide the benefit of passive income or income that does not require a consistent and direct exchange of time for money. And as you continue to put your earned income or the surplus earned income you have at the end of every month after expenses into these asset classes, you will begin to increase your passive monthly income. And then the idea of financial freedom is attainable. It is realistic. It is achievable. And you have a solid target, a benchmark that you can begin to consistently pursue and work toward. Albert Einstein is undoubtedly one of the most brilliant scientific and mathematical minds the world has ever known. As a Nobel Prize winner, theoretical physicist, mathematician, and educator that lived during the early 20th century, his accomplishments are far too many to number. But to note that he stated, compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. Compound interest is the idea and the concept that for every dollar you invest, not only does that dollar earn interest, but the interest on that dollar earns interest. So the more money you invest, and over the longer period of time that you invest, the more that small initial principal balance grows from the interest on the interest on the growth of the interest from that principal balance. Conversely, if you leverage credit cards and revolving credit to live beyond your means, to keep up with the Joneses, to buy things that you don't need, you are someone else's cash cow in that you are paying them. You are paying them not only the money that you borrowed, not only the interest on the money that you borrowed, but the interest on the interest on the interest of the money that you borrowed the longer that that debt is outstanding. You are quite literally someone else's asset, and you are your own liability. Take advantage of the fact that we live in a society that allows us to freely invest, not only in ourselves, but in assets, that allows us to manage our money as we see fit. Be your own asset. Don't be a liability to yourself. Be your own asset. Leverage your time, your resources to your greatest advantage, and build financial freedom for yourself and your family. Reach and attain the goals that you desire and become financially literate and increase your financial IQ. This is all possible, but it requires you to take the very first step. Thank you so much for tuning in. I hope that the information provided in this presentation either helps you to begin or accelerate your journey towards financial freedom. I truly believe that we all have the ability to reach financial freedom, but we must create the right mindset, take the decisive action, and be disciplined in the process. Once we decide that financial freedom is what we want, we must lay out a clear and decisive plan of action, and then we must stick to it until we reach our destination. As always, stay blessed and invest. Check out the description below. I've included some resources for you to read and check out. Also, if you like the content in this video, please like, share,